to today's course. In today's course, what we are going to be treating today is candlesticks. As seen us on our screen here, what you're going to be learning today is all about candlesticks. We're going to be introducing you to candlesticks. Now, as you are new to Forex trading, now candlesticks are going to be your close body. This is what you're going to get yourself familiarized with, so you would know how to take trades, when to take trades. When you see a candlestick, you know what it signifies on the chart, you know what price is doing. That is what you're going to be learning in today's course. All right, my name is Vince, and as usual, guys, I'm going to be your host for today's course. Now, with that being said, let's just dive in straight into what we have for today's course. All right. Now, let's move on. What might cross your mind next is, you might be asking, what are candlesticks? What is the meaning of candlestick? What is a candlestick? All right. Now, from my own point of view and my own understanding, I say a candlestick refers to a visual representation on a chart that shows the opening, closing, highest and lowest price of a currency pair during a specific time. Now, candlesticks are being formed, in respect to time. Okay, a candlestick can be formed in 1 minute, can be formed in 2 minutes, it can be formed in 1 hour, it can be formed in 4 hours. Now, at the beginning of that time, to the end of that time, the time range within those time, those specific time, a candlestick is being formed. And we say the candlestick, it shows us the opening, the opening price, the closing price, the highest price, the highest price went to at that specific period of time, and also uh the lowest point price went to at that specific period of time. That is what candlestick tells us. That is what a candlestick tells us. Right now, this is a pictorial view of what a candlestick looks like. Okay, now you might be asking what a candlestick. This is me telling you that this is what a candlesticks look like. Now, we have two types of candlesticks, right? We have the bullish candle, we have the bearish candle. Now, so many trading platform uses the green and the red. They use the green candle to signify the bullish candle. They also use the red candle to signify the bearish candle. Now, also, so many trading platform uses white candle as a bullish candle, and they also use black candles as uh bearish candles. Right now, what I'm telling you is you should understand that the colors doesn't matter. What matters is the opening, the closing, the highest point price went to, and also the lowest point price went to. That is what tells you what a candlestick means. All right, now at this point, if the price of a candle, if a price of a pair closes above, closes above the opening price of a candle, of if, let's just say, a price opened at this point and it closes at this point, we can consider that as a bullish candle. And if it opens at this point and closes at this point, we can consider that as a bearish candle. Now, what matters is the opening price, the closing price, the highest point price went to, the lowest point price went to. That is what matters. All right, now let me explain this more further. Now, let's just take this to be a tug of war. Now, a currency pair opened at this point, okay, and at some point the bears, the sellers, push price down to this point, and some at some point the the bullish, the bulls, the buyers were like, are we going to sit here and let the bears gain, you know let the bears win us, or let the bears conquer us? And they were like, no, we can't sit and let this happen. And they gained momentum and then pushed price from this point to back to the opening price, and then from the opening price they still pushed price up. They still pushed price up, pushed it. This is like a tug of war where the other gains strength over against the other, and then they started gaining momentum, pushing price up, and then they also pushed price up to this point right here. And then the bears gained a little bit of strength and then pushed price back to this point. They don't have more strength to push it again. This causes the bills, the buyers be, to be winners in this scenario, right? The price then closes at this point. Now, this is a bullish candle. Then we can consider this to be a bullish candle. This is just what I just explained now is just a little explanation of what happens during, or what happens when a candle is being formed. Same thing here. The price opened at this point at the very, it opens at this point, and then the bulls, the buyers, pushed price up to this point, and the sellers were like, no, we can't sit here and let the buyers gain victory over us. And they were like, no, they pushed price back to the opening price, and then back down, down, like a tug of war. They gained strength over the bulls, then pushed price back down to this point, and then the bulls gain a little bit of strength and then pushed it back here. They lost the strength, and then the price closed right here. Okay, so this is it. This is the opening price and this is the closing price for a bearish candle. This is the opening price and this is the closing price of a bullish candle. Okay, so that is it, guys. Let's just move on. We are moving on, guys. Like I said, uh the colors doesn't matter. Okay, the colors doesn't matter. This is also a candlestick. This is also a bullish candle. This is also a bearish candle. This is the opening price. This is the opening price for a bullish candle. This is the closing price. This is the highest point price went to, and this is the lowest point price went to. Now for a bearish candle, this is the opening price, and this is the closing price. This is lowest point price went to, and this is the highest point price went to. Now you see this long ass line right here, this long ass line, right? This lines at the top. Now this can also be considered, this can also be called a wick. Some people calls it wick, some people calls it shadow. Preferably I like to call it wick. This is what I call it. Some people call it shadows, some people call it wick, but I call it wick. Okay, and this body right here is, it signifies the momentum, how strong a candle is. Okay, if you are to take this candle, for instance, right, this candle and this candle, we say the other candle has momentum more than this candle because it has a lot of space in between it. All right, so moving on. Now you might be asking, what rules what role does candlestick plays to forex trader? Why is it so important to forex trader? Right, let's go. Now candlesticks are important to forex trader in a lot of ways, like uh The first reason why I say candlestick is important here on my list is I say candlestick is important because forex traders. Okay, candlesticks are important to forex trader because it is considered as a visual representation of what is going on in the market. By looking at a candlestick, we can get valuable information about the opening, high, low, and the close of price, at a given specific period of time, like what I explained, uh in the beginning, at the when I was defining what candlesticks is. It gives us, a clue. It tells us what's happening. It gives us an idea of what price is doing, of where price is going, of where price is heading. That is what a candlestick shows us as forex trader. So we're able to know where to buy. We are going to be knowing where to sell. Okay. So practically it gives us, an idea about what is going on in the market, about the price movement. Okay. So, and the second reason why I said candlesticks are important to forex trader, it is because candlesticks are flexible, right? Candlestick can be used alone, okay, or in combination with your technical analysis too, such as the moving averages, your momentum oscillators, your indicators, your trading indicators, practically your trading strategy. You can use candlesticks in and join them together, so they can give you more trading opportunity, like just add it to make it to get you to give you more conferences, to get. This is what I mean. Now, when, let's say, you've done your analysis, your technical analysis, you want to buy here. Now you can use candlesticks as uh additional confluence to what is making you get into a trade. Now, let's say you want to buy you want to buy Euro USD. Okay, you see a candlestick with a lot of momentum, bullish momentum. Now that's to say, wow, this is an opportunity for me to get in for a buy. Okay, in addition to whatever conference you have. Okay, you can use candlestick, and also you can also use candlesticks alone as your conference, but preferably I like to use candlesticks uh in addition to my conferences, to my other conferences, for me to get into a trade. Moving on, the third reason why I said candlesticks are important to forex trader is because, in the human relation to money, I mean, money is always dominated by fear, greed and hope. Now, candlestick analysis will help us understand these charging psychological factor by showing us how buyers and sellers interact with each other. Now, no matter what happened during that specific period of time, during that 1 minute specific period of time, during that 1 hour specific period of time, during that 4 hours, depending on where you set your time frame. Okay, whatever happens during that period of time, the candlesticks is going to tell us. Now, are the bulls in control? Are the bears in control? Now, when I say bulls, I mean the buyers. When I say bears, I mean the sellers, right? Now, are they in control? Who is in control? Now, who won the competition? Is it the buyers? Is it the sellers? And stuff like that. The candlesticks gives us uh gives us an understanding of what's happening between the buyers and the sellers. Now, the fourth reason why I said candlesticks are important is because they can be used by most professional traders, banks, and hedge funds. Now, like I said in the other course where I introduced Forex to you guys, I said the Forex market is being moved by big boys. I mean, by the big boys, the big banks, the hedge funds, the source funds, the, those guys with, those guys with massive funding. Those guys are the ones who move the market, and it is candlestick that they use in trading. Now, like I said, we traders, we trade in accordance to the big boys in the market. We don't trade on our own. we are following their footstep, and since we are following their footstep, we are going to be using candlesticks, what the candlesticks are saying. And since the big boys are using the candlesticks, it makes us to be on the right path while trading. All right, let's go on. Now I'm going to be introducing you to some candlesticks pattern and also what they signify. Okay, so when you see a candlestick, I'm just going to be there are, thousands of candlesticks pattern, but in this course I'm going to be introducing you to just a few of them, candlesticks pattern. So whenever you see them on the charts, whenever you see them when you want to take a trade, or maybe you just glancing through trading view, you just back testing, or maybe doing something, when you see a candlestick, you'll be able to tell what the price is doing, what price is about to do, right? So let's just move on. First on our list is the bearish engulfing bar patterns. Now this pattern of candlestick, consists of two bodies. Now the first body is smaller than the second one. Okay, in other words, the second body engulfs the previous one, just like the meaning of the candle tells us. The bearish engulfing candlestick, it consists of two candles. Now this first candle is smaller than the the other candle. That is what it means. Okay, let me give you a pictorial view of what I'm talking about. Now this is what a bearish candle look like. A bearish engulfing bar pattern look like. This is what it looks like. Now this is the small body. Okay, the candle with a very small body. Okay, now this is the candle with a very bullish, with a very bullish move, right? Pretty much this candlestick right here engulfed this candle. Now whenever you see this kind of candle, this candle mostly occurs whenever price is in an uptrend. Okay, whenever you see this candle in the charts, most times in an uptrend, this candle pattern, this candlestick pattern causes price to reverse. Now if the price of a candlestick, if price of if a chart is in an uptrend, whenever this candlesticks appears, expect price to reverse down to downtrend. Okay, this is what I mean. Let's just go a pictorial view of a chart. Okay, now this is it. At this point, right here, price was in a bullish move. You see candle, a bullish candle. You see this candle going up. You see this candle. Price was in a very bullish move right here. Now, and then the bearish engulfing candlestick appeared. This right here, this small body and this long momentum candle appeared. Now what happened after these candles appeared? The sellers gained momentum. The sellers begin to dominate price at that moment, and they cause price to go down, right? So this is essentially what I was trying to explain. This is it, guys. Bearish engulfing bar pattern. Now let's move on. The next on our list is the bullish engulfing bar pattern. Now this bar pattern consists of two candlesticks. The first one is the small body, and the second one is the engulfing candle. This is also like the other, but in this pattern, the price changes from a downtrend to an uptrend whenever this bar pattern appears on the chart, right? Now this is a pictorial view of what I'm saying. This is it. Now the small candle, the first candle is a very small ass candle, and then the other is a very big bearish candle, right? It causes price to reverse from an uptrend to a downtrend. So basically these candlesticks appears during during when price is in an uptrend. This candlestick tend to appear, right? This is it on the chart. Now, as you can see, price was in a very downward move, right? At some point, price started losing momentum right here. Small candle, small candle, small candle, and then this huge ass bullish, bearish engulfing bar appeared, thereby engulfing the previous candle. Now, what happened after this candlestick was formed? The bulls gained momentum. They dominated the market. Now price started moving upward, right? So basically, this bullish engulfing candlestick, as it says, appears during when price is in a downward move. Now it causes price to reverse to the upside. Okay, so that's it. That's it. That's it. Let's go on. The next on our list is doji candlestick pattern. Okay, now this candlestick, when this candlestick forms, it tells us that market opened. Market opens and closes at the same price, which means that there is equality and indecision between the buyers and the sellers. There is no one in control of this market, right? Now, what's this candle? What am I trying to explain here? Now, when these candlesticks are being formed, at the exact point where price opens, that is where price comes back to close. Okay, does that make sense? Okay, let's make it make sense. Let's make it make more sense to you. Okay, now this is a pictorial view of what I'm talking about. This is a doji candlestick pattern. Okay, now this is the opening price. Okay, at some point price pushed up to the upside, stopped here, and then the bears pushed it to the downside, okay, causing it to come down to this point, okay, and then the bulls gained momentum, and then pushed it back to where price opened at first, and then it closed at that same point. So this causes price to, it causes indecision between the buyers and the sellers. Nobody is in control at this point. Okay. So moving on, this signal means that the market didn't decide which direction it would take when this pattern occurs. Now, okay, that's it. That's it. This signal occurs that the market didn't decide which direction it would take at that moment. Now, when this pattern occurs, the doji pattern, as that's what we are talking about, when it occurs in an uptrend or in a downtrend, it indicates that the market is likely to reverse. So whenever you see whenever you see doji candle in on the charts, just expect price to reverse. Okay, this is what it looks like whenever I see these candlesticks on a chart. This is what it looks like. Now let's move on. Let's see it on a chart. Now this is it. Now at this point price was in a very upward move, a very bullish move. All right, now price was in a very upward move, gaining momentum, and then at some point this doji candlestick pattern uh, appeared on the chart. Then what happened next? The bears came into the market and then started pushing price down. Now, if you just need to understand these candlesticks, when you understand these candlesticks, then you should be able to relate with the market. You should be able to relate with what the big boys are about to do. You should be able to know when to buy and when to step in for a sell. So this is it, guys. Whenever you see a doji candlestick on the chart, expect price to reverse at that point. And then the next on our list here is the morning star candlestick pattern. Now this morning star candlestick pattern is considered as a bullish reversal pattern, right? It is a bullish reversal pattern. It often occurs at the bottom of a downtrend, and it consists of three candlesticks. Now since this candlestick consists of three candlesticks, and we said it's often occurs at the bottom. Now first of all, the first candle, now we said it consists of three candles, right? The first candles is a very bearish candle, that has a lot of momentum, right? a bearish candle that has a lot of momentum, and then the candle that follow might be a bullish or a bearish candle with a very very little body, small um momentum, no momentum at all. Then the candle that follows is an engulfing bullish, is a bullish engulfing candlestick, engulfing the previous one. Right? First, I said the first candlestick is the candlestick with bearish momentum, and then the candles that follow uh might be a bearish or a candle, a bearish or a bullish candle with an with little body, little body or no momentum at all. Then the candle that follows, it's a candlestick with bullish momentum. Okay, and engulfing, a bullish engulfing candlestick. That is what follows next. This is what I'm talking about. Now this is what it looks like. Bearish engulfing candlestick follows. This is now consists of three candlesticks, right? Now this is the first one is the bearish candle, and the second one here is the candlestick with little body. It can be bullish, like I said, it can be bullish or bearish. It can be a bullish or a bearish candle. In this case, it is a bearish candle, right? And then the candle that follows next is a bullish candle that engulfed the previous one. So this is it. This candlestick is formed at the bottom of an uptrend. Sorry, at the bottom of a downtrend. When this candlestick forms, expect price to reverse to the upside. Okay, expect price to go back to the upside. Now let's move on. Let's see this view on the charts. Now this is what I'm talking about. You see, at this point, price was in a downward move. You see, the bears are in control of the market at this point. Right, the bears were taking control of the market, and then this huge ass bearish candlestick appeared. This huge ass bearish candlestick appeared, and then the second one appeared. Like I said, this can be a bullish or a bearish candlestick, and then the candlestick that followed next was the bullish candle. Okay, now in combination of this three candle, we get the morning star candlestick pattern, and when immediately this pattern was formed, what did price do? Price started ascending. Price started ascending to the upside, gaining much momentum, gaining momentum, gaining momentum. So whenever you see this price, this bullish pattern, whenever you see this candlestick pattern on the charts, what you should be doing is be getting in for a buy. All right, let that sink into your brain. And the next on our list is the evening star candlestick pattern. Now this is just the opposite of the morning star candlestick pattern. Now since the morning star candlestick forms at the bottom of a downtrend, this candlestick pattern form this evening star candlestick pattern forms at the top of an uptrend, thereby causing price to reverse from an uptrend to a downtrend. Now let's just read what it said. The evening star candlestick pattern is considered as a bearish reversal pattern that usually occurs at the top of an uptrend. Now the pattern consists of three candlesticks. Yeah, it's still the same thing. They both consist of three candlesticks. Okay, the first one, now in this case, the first one is a bullish candle, with a lot of momentum, and then there's a candle that follow might be a bullish or a bearish with little body, no momentum at all, and then the third candle that follows is a huge ass bearish candlestick, okay, that engulfed the previous one. Okay, this is what I'm talking about. This is what it looks like. First bullish first, then this little body candlestick appeared. This might be a bullish or a bearish candle. In this case, it is a bearish candle. Okay, and then this huge ass candlestick appeared. Okay, this huge ass candlestick, this huge bearish candlestick appeared. Now once you see this candlestick forms on the charts, what you should be doing is expect price to go to the downside. Okay, now these candlesticks are being formed mostly at the top of an uptrend, and like I said, whenever you see them on the top of an uptrend, expect price to go to the downside. Okay, now this is what I'm talking about. This is the evening star candlestick pattern. As you can see, price was in an upward move right here. Price was, gaining momentum to the upside. Price was going to the upside. Price was going to the upside, and at some point, the evening star candlestick pattern was formed. Okay, and then after that, what did price do? Price started losing momentum. Okay, the the sellers stepped in after seeing this candlestick pattern, and then they pushed price to the downside. They pushed price to the downside. So guys, this is going to be all for today's course. I believe with these few, these are, not just, this is not just few. I believe these are the most important candlestick pattern which you must familiarize yourself with, just in case you find, some things, you find some things difficult to understand. I need you to rewatch this course again, digest the course, make it sink into your brain. Go back and rewatch whatever you don't get. Go back and rewatch, so you will digest whatever I have explained in this video. So guys, you just need to familiarize yourself with candlesticks, so you know what price is doing at that particular period of time. So you gain an edge. Like I said, you need to have an edge to which you approach the market. You don't just wake up in the morning and then place a buy or a sell. If you do that, you're on your way to losing money, right? So you want to have an edge at which you approach the market. You want to have, you know you want to have an algorithm. You want to have a strategic move at which you approach the market. So guys, master candlesticks, and then you're going to see yourself, moving. That's, let's just say that's just going to be a step, one step. You're just going to be one step ahead of those, who are finding it difficult to be a profitable trader, right? So guys, uh my name is Video. I said my name is Video, sorry. My name is Vince. Thank you for watching today's course. Like I said, if you find anything difficult to understand, go back and rewatch and digest. I don't want to make this course too lengthy. I'm gonna be seeing you guys in the next one. Thank you for watching, and see you guys in the next one. I love you all. Peace out.